Then from that, you can use that tool to find stocks. You can search up the name, you can buy, you can sell. Most of these brokers, they would also have you take a test before you can do anything, just to learn the interface and learn the basics of investing. It's really straightforward. The only thing not straightforward is how to pick and how to analyze the stocks that you want to buy. So an overview of how to analyze a company. First up, you would start by understanding the business. What do they sell? How do they make profit? What is their deal? What is their value proposition? Then you would check for a competitive edge. So look for the strengths, the patents, the market share. What makes this company stand out? And what makes you believe that they have something unique that they offer to their customers or to their business partners? You also have to look at the bigger picture and the trend of the market, so to speak. Even though you understand the company and it has a bright future, what about their sector? How is their sector moving? How do you see that sector going onwards? Do you see that sector as being profitable for the next 5 years, 10 years, 20 years? This is again very important to think about for the stock, but also for your investment horizon. So maybe it could be a good investment for the next 5 years, but if you want to find a long-term investment, which you believe in, maybe you have to find a stock within a sector that's growing and has possibilities and is not declining. This is arguably the 3 most important questions to ask yourself before investing, the fundamentals of how it works. Once you have done that, you can start looking into the cash flow, the balance sheet, the return on equity, the price earnings, and so on. And if we take, for example, the financial statement, you would look at the income statement. Has the revenue been growing for the past years? Also, has the revenue been growing at the rate which the company has promised? How are their assets compared to their liabilities? Are they continuing to have extremely high debt? So liabilities, and more important, can they pay off the interest of these liabilities? How are their costs behaving? Do they increase costs or try to decrease costs if they are increasing costs? Is that because they have just bought new products or machinery, for example, which is supposed to help the company grow for the next 3 years or whatever? Below all the revenue and the cost and the balance sheet. So, is there anything left? Is there a cash flow after this? What do they do with the cash flow? Do they invest it back in the company or do they distribute it to the investors? If they are distributing it to the investors, do you think that is too early for the company? Do you think they should invest more back into themselves because they are in a critical phase of growing? Or are they at a point right now where they can actually pay out? What do you think? So now this is some thoughts to look at the financial statement. But there are also some key ratios which you can look up online, which is used to analyze the company you're looking at and compare to other companies in the same sector. This is, for example, the most common ones is ROE, return on equity. And this is basically to take the company, deduct all debt or liabilities, and then you have your equity. So if you have that number, and then you have a number of how much income you did, you divide those two, and you get a number. This number shows how much the company has grown compared to its equity. Then you have the net profit margin, where you divide the net profits with the revenue to see how much profit you actually made after cost. So even though the company is bringing in X amount of dollars in revenue, how much is left after cost? These 2 key ratios is mainly used to see how profitable a company is. And it's kind of easy to get a 2-digit number and go to another company, do the same analysis, and compare that number to the number which you get from the new company. A quick way to compare different companies. Then you have the evaluation ratio. The most commonly used is the PE ratio, which takes the market price of the stock and divides it by the earnings per share. So it's a way to compare the value of the stock, of how much the stock is going to pay you back, essentially. So a recommendation for a free tool is this website called finewiz.com. This site, in my point of view, offers one of the best overview of both stocks, markets, commodities. You even have crypto. You can go to a news section here where you can choose between market news, stock news, F news, and crypto news. With every story coming out from some of the biggest newspapers, you click the link and it goes directly to the article. And here, this is, for example, Trump talking about the next move that could hit pharma. You can go to home. If you want to look at the whole market by sector, you can click this one. And you can see you have technology here. In this sector, you have Microsoft, Oracle, Panacea. You have some of the biggest players. You have semiconductors with Nvidia, AMD, Intel Corp, and so on. You have financials here with JP Morgan, credit services with Visa MasterCard, asset management, financial data, capital markets, healthcare, communication, consumer cyclical with Amazon, auto manufacturer. And with this, you can see first up how the whole market moves, but also which sectors in the market that pulls the gains or takes the losses. This is SP 500, you can see Russell 2000. So 2000 stocks, you can see the whole world here, ETFs, even crypto, and you can kind of play around if you want to see the bubbles or maps or whatever, but this is a super good overview to play around, in my opinion. If you go back to home, you can see some of the biggest companies here. You can see, if you scroll down, you can even see the major news and how it affected the different stocks. If you scroll further down, you can see it's called insider trading. So this is, for example, the CEO or the chief legal director, whatever, you can see. If they sold anything, if they exercised an option, and so on. Also, a great tool if you want to follow a specific stock. You have your commodities down here with oil, natural gas, gold. So in total, a great overview. And I use this daily to see what's going on and keeping an ear to the ground, so to speak, instead of having to read thousands of different articles or having to wait at the specific company's website to release a statement on something that I can just look here on the news. And for the most part, it pops up here. And another thing is that if you really want to dive deep into a company, we can search up, for example, NVIDIA. So here, NVDA Corporation. But down here, you have all these KPIs that we talked about. So you have the PE, you have the PEG, you have the enterprise value compared to EBITDA. You have all these kinds of ratios. You have earnings per share over here, return on equity over here, you have a profit margin here. And on the far right, you have the performance. So performance per week, per month, per quarter, 3-year, 5-year, and even 10-year. And the cool thing is here that they have already listed the peers, so the biggest competition to NVIDIA. So if you want to go check, for example, MD, you can go there, look at their ratios, and quickly get a view of how do the two companies stand compared to each other. You could also go to Intel, for example, see their numbers. So a quick, efficient overview where the calculations of these different ratios are already done for you and set up for you to perfectly dive into. But if you want to see the numbers for yourself, you could go to the statements. There is an income statement, so you can see the total revenue. You have the gross profit, have the cost of goods, interest expenses on the loans, price to earnings, net margin, and so on. You have the balance sheet where you can see their total liabilities, their total equity, and also their return on equity. You can go to cash flow and you can see the cash from operating activities, cash from investing activities, cash from financing activities, and at the very bottom, you have the free cash flow. So I would highly recommend using FinViz. And for you to play around with it just in order for you to get a taste of, see the news, you see what's happening to the numbers, and you get a feel for how these two correlates, both with the single stock, but also in the sector and the whole market. We also have liquidity ratio and solvency ratios and a lot of other ratios and metrics, which has rules of thumb of where it should be for the company to be healthy and the company to be in a good shape. But you have to take all these ratios and also put it into perspective of what type of company is it? Where is the company in its lifetime? What is the market expectations? What is the management saying about these ratios? The main point here is just that alone, you cannot take these numbers for good. Before you go headfirst into all these finances and read all the small details of a company, you should simply understand the business, check their competitive edge, and see if the sector which they're in is growing. After that, you can use these ratios in order to compare different companies and see which company you believe in the most. And just to make a bridge from Lesson 4 to Lesson 5, we have been talking about how to invest, where to invest, why we invest, and what to be cautious about. And as we saw with Anna, Bo, and Carl, long-term and consistent investments works.